So what we're going to do tonight is, you know, we have got the big Forex Pips Don't Lie Fibonacci boot camp coming up. Okay, so this is going to be kind of like what we're going over with this Candlestick Bible. It's kind of going to be some pre boot camp stuff. Okay, so what we are going to do is, you know, I'm not stupid. I drop a link with opportunities and trainings, and y'all have just grown so. I'm not stupid. Okay, I hope I have quit talking. I drop a link with opportunities and trainings, and y'all have just grown so. I'm not stupid. Hold on. Here we are. Let me close that out. Okay. I drop, you know, I hope everyone's got their lazy man's way to riches, and I hope they're working on their Dynasite. So proud of every one of your vision boards that you've done. I could tell that most of you really took time and thought. That's mine right there. Into doing it. And so what I want for you to do is put it somewhere where you're going to see it several times a day. Several times a day. You'll see I've got mine on my wall. And I will say since March, out of 10 things on it, 1, 2, 3, 4, half of it has come to pass. And the bigger stuff is coming, okay? So I want you to put it somewhere every single day so that you remember what you're working for, okay? Now, if you do not have your notebooks, guys, never, ever, ever come to a class or a meeting without your notebooks, okay? So I'm going to give people just a couple of seconds. Y'all get your notebooks. How many people have we got with us? Okay. So here we go. Okay. So tonight we're going to start the Candlestick Bible, okay? It was invented by Manihisha Hama, okay? This guy is the most successful Forex trader in history. His method that we're going to cover in this book earned him like $10 billion in the Forex charts, okay? But like I said, I'm not dumb. I put a book in there, or I drop a PDF, and y'all read this, and it don't really happen. And I really want you guys to get it. It's so important that you get it, okay? So we're going to do it together. If it takes us a week, if it takes us 2 weeks. So everybody really needs to be on. Okay. So like I was saying, you know, this has been donned as one of the most powerful trading systems in history, okay? The guy that invented it, they call him the father of the candlestick chart patterns. $10 billion. This has earned him $10 billion. This candlestick trading Bible, when you learn these candlesticks, when you learn candle patterns, and when you take the Fibonacci boot camp that we're having, it's going to put you where you need to be. And I'm full confidence, but by the time we finish this and the time you finish my boot camp, you are all going to be master traders. So it's so important. It's so important that you show up every night, you take notes, and you study your charts, okay? Sorry, I'm going to get my chat box up. Hey, guys. Hey. So everybody have your notebooks, okay? Have your notebooks ready. And we are about to change the course of your trading, okay? First of all, you know, and we go through this in the syllabus, you know, every time we go through, we talk about candlesticks. What are candlesticks, okay? And you might not know this, but the candlesticks are actually the Japanese candlesticks, okay? They are formed using the open, the high, the low, the close of the time frame that you are on. So if you were on a 5-minute chart, this is what price would do in 5 minutes, okay? If you were on a 15-minute chart, one candle okay. So if we were on 15 minutes, a candle, this is everything that price done in a 15-minute time. So it's same with 30, same with hour, 4 hour, okay? So I want you guys to write this in your notebook, okay? Write this in your notebook so that you have a picture, okay? I want you to draw these candles. This is your body. To call them shadows is old school. We were just talking about this in the Tradeology meeting the other day. Nobody calls them shadows anymore, okay? You're going to be hearing these referred to as wicks. So I want you to write the wicks. Upper wick, lower wick. And then on the other side, I want you to draw the exact same thing. Maybe shade it in a little bit. I want you to write body, upper wick, lower wick. And then I'm going to explain to you, okay? When it is a bullish candle, okay? When it is a bullish candle, does everybody know what bullish means? If the market's bullish, where is it going? If the market's bullish, where is it going? Yes. Yes. Okay. If this is a bullish candle, okay? It opens at the bottom, okay? What this means is that at some point in time, after this candle opened right here at the bottom, it went down. It went down to where the bottom of this wick is, okay? It went up. It went all the way up, all the way up to this area that says high and went back down to where it closed, okay? So I want you guys to put this in your notes. Open, low, high, and close, okay? And it is the same thing with a bearish candle, okay? When you have a bearish candle, guys, when you have a bearish candle, it opens right here. And at some point in time, during whatever time frame you're on, it goes all the way up to here, price does, before coming all the way down to here, the bottom of your wick, before it comes up to here to close, okay? This is your anatomy of a candlestick, guys. You've got the body, the upper wick, the lower wick, okay? Now, most of the time on your charts, the bullish candles are white and the bearish candles are black or color, okay? That's typically how they're set up, okay? Is that the bullish candles are white and the bearish candles are dark, okay? You can use whatever color you want. The most important to this is your open price and your close price, okay? Write this down. If your close is above the open, it is a bullish candle. If your close is below the open, did I say that right? If your close is above the open, sorry, it is bullish. If your close is below the open, it is bearish, okay? And once again, okay, this block part or the filled in part is your body, okay? These are your wicks. The top of the upper wick would be the high. The bottom will be the low, okay? Now, let's talk about long versus short when it comes to candles, okay? Let's talk about long candles versus short candles, okay? Long candle bodies refer to stronger buying or selling pressure, okay? If there is a candlestick where the close is above the open, okay? If the close is above the open, see? Bullish, they open down here and they close up here, okay? And it has a long body. This indicates that the buyers have more control, okay, during this period of time, okay? And on the other one, on the other side, on the flip side, okay, on the flip side, okay, if the market is open and it closes down here and it's a long body and the candle's filled in, that indicates that for that period of time, the sellers have control, okay? The sellers have control. Now, when you have little bodies like this, it means that there's little or no buying or selling activity. Little or no buying and selling activity. Write this down, guys, because we're about to talk about the wicks. Wicks give us very important information about what's going on with the trading session, okay? Your upper wicks, they dictate the high. The lower wick dictates the very lowest, okay? And then the candlestick body shows where the real action occurred, okay? Candlesticks with short wicks indicate the action was confined near the open and close. Short wicks mean most of the action took place at the open and close of the candle. Now, if a candle has a long wick, like in this first picture right here, a long upper wick and a short wick at the bottom, it means that the buyers flex their muscles, okay? And bid the price higher, but then the sellers come in and pushed it down, okay? When you have that, know that the sellers took control of that, okay? If it has a long wick at the bottom and a short wick at the top, it means that the sellers come in and pushed it down, then the buyers took over, come back in, and drove price up, okay? Does that make sense? When you guys see a long wick at the top and a short wick on the bottom, that the sellers took over? And then when you see it with the long wick on the bottom and the short wick on the top, that the buyers took over, okay? So I want you guys to take really good notes. I want y'all to read over this, okay? When you get to know these candles and their patterns and what they mean, you're going to start trading different, okay? Yeah. So we're going to talk about engulfing candles now, okay? We are going to talk about engulfing bar candlesticks, okay? An engulfing bar, as it states in its title, is when it fully engulfs the previous candle, okay? An engulfing bar, it can engulf more than one previous candle, but to be considered to be an engulfing bar, at least one candle must be fully consumed, okay? And it says here, the bearish engulfing is one of the most important candlestick patterns that there are, okay? Now, this candlestick is going to consist of two candles, two bodies, okay? And as you can see right here, the first body is smaller than the second body. So in two words, it engulfs the other. So this candle is small. Here comes this candle and engulfs it. Does that make sense? This is how it's going to look on your chart. You've got your smaller body, this candle. It opened down here because why? Because it's a bullish candle. And it come down to here. It come up to here before it closed, okay? it opened. You thought it was going to keep going up because that's how it looked when it started, but nope, boom, sellers pushed it down. Okay, this is a bearish engulfing candle. Write this down in your notes. Draw pictures. When you've got bearish engulfing candle, okay, it's a sign that the sellers are getting control of the market. Okay, you'll see this at the end of an uptrend. It indicates that the buyers are engulfed by the sellers. It usually signals a trend reversal. It's not always the case. When we get to the end of this book, it's going to tell you more about it, okay? Look, bearish engulfing candle. It ate the whole thing up. Do y'all see that? And as you can see, okay, price action, market structure, this was in an uptrend. This was in an uptrend. Big scary candles, big scary candles. Guess what, guys? It was still going up. Okay? When you see a bearish engulfing candle, watch out, because it means the buyers are not in control. Okay? Now, you can't just trade any bearish. Now, I'll say this again. You cannot just trade any bearish engulfing candle that you find on your chart, okay? You're going to need other technical tools. What I want you guys is to start recognizing these candles, okay? We're going to learn more about the technicalities and stuff of it. All right. Let me see. Let's see if we can find some. Let's see if we can find some. Oh, we already lost 3 people. They're not into candlesticks. But you guys are. Let's see if we can find some bearish engulfing. On this template, we're not. All right, bearish engulfing candles. Bearish engulfing candles. Right here. You see that? Right here is one. Let's keep looking for bearish engulfing candles. Here's one right here. Do y'all see? And what happened? Price went down. Bearish engulfing candle. Do y'all see that? And what happened? Guys, looky here. Bearish engulfing candle. You see that? Y'all see what I'm talking about? Now, let's talk about bullish engulfing candles, okay? What bullish engulfing candles tell us is the exact opposite. It tells us that the market's no longer in control of the sellers, that buyers are trying to take control of the market, okay? When a bullish engulfing candle forms in the context of an uptrend, it indicates a continuation, okay? So, you know, we may have some pullbacks, and then you'll get a bullish engulfing candle. That means a continuation, okay? But if you have been in a downtrend, and you see a bullish engulfing form and eat up that candle, it could indicate a reversal, okay? It can indicate a reversal. The right here shows us how the market can clearly change direction after the formation of a bullish engulfing candle. Look, see what happened? The smaller body right here represents that the selling power was covered and took over by the second body because it's bigger. It's got more buying power, okay? Color of the bodies isn't important. What's important is that this smaller one was totally engulfed by this bigger one. Do y'all see that? Engulfing candles. Engulfing candles. Don't want you guys trying to trade the market using this alone because you're going to mess up, okay? More to be revealed. I want you guys to start looking at your chart and finding these candles and identifying them. Are they bullish? Are they bearish? Engulfing candles, okay? And we're going to learn things as we go through this book together that's going to teach us. This is just one of the things that we're going to use for a strategy, okay? But for right now, the most important step is that you know what a bullish and a bearish engulfing candle is. Let's go back to the chart and let's find some bullish engulfing candles. Ooh, look right here. Here's one. This candle totally ate up that one. And then what happened? It started in an uptrend. It started in an uptrend. Right here, this candle totally engulfed that one. And then what happened? We started in an uptrend. We started in an uptrend. Right here's one. Right here's one. See this bullish candle? Totally ate up this bearish candle. What are you seeing, Charlie? Okay. So we got some bearish engulfing candle right here, and then what happened? It took a nosedive. It took a nosedive. It's still in a downtrend though. Bullish and bearish engulfing candles, okay? So that's part of your homework. I want you to look up some charts and start identifying these, okay? You're going to hear me talk about this next candle a lot, okay? This is the doji. This is the doji candlestick. It's one of the most important candlesticks because it tells us that the market opened and closed at the exact same price, okay? What this means is equality and indecision between the buyers and sellers. No one. When you see a doji candle, no one is in control of the market, okay? I want you to write a doji candle, draw a picture of it. This is your doji. It looks like a cross. It means price opened. It went where it went as the low. It went where it went as the high. And then it went to the exact same spot to close. What do you think about that? When you see a doji candle, it means the market didn't decide which direction it's going to take, okay? A lot of times this can signal a reverse. A lot of times it can. Not always, but a lot of times. As in this picture right here. This shows how the market changed after a formation of a doji. The market was going up, meaning buyers were in control. And what happened? The buyers were unable to keep price higher. And at that time, the sellers weren't able to push the price lower. It's a clear indication that a reversal could happen. Okay? Don't go just by that. But that's what these candles can signify. Okay? Remember, write this down. Doji equals, indicates equality and indecision. A doji is equality and indecision. A doji means equality and indecision, okay? If you see it at the bottom or the top of a trend, what it's signifying is that the trend you're in is losing its strength. If you're already riding that trend, if you've been in a buy or you've been in a sell, you see a doji candle form, it's time to secure that bag, okay? And we're going to learn other technical analysis. We can also use dojis as entries, okay? But we are not talking about strategy right now. We are merely talking about candles, okay? I want you guys to draw this one. This is a dragonfly doji. A dragonfly doji. It looks like a T. It happens when the open high and close are about the same price. Okay? What characterizes this is you've got a long lower wick. It shows that the resistance of the buyers and their attempt to push the market up. Okay? This is the example of a perfect dragonfly doji. I want you to draw this out, and I want you to start looking for them. Okay? This long tail shows you that the forces of supply and demand are almost at balance. And that the direction of the trend you're in might be taking a major reversal, okay? This example below indicates a bullish reversal created by a dragonfly doji. Look. See that? Okay, in this chart, the market was testing the previous support level, okay? Caused a strong rejection from this area, okay? This dragonfly doji with a long tail shows us there's high buying pressure in this area, guys. It takes a lot of buying pressure when a candle, when price is down here, for it to be, you know, when it's in a downtrend, when it's bearish, when it's selling, it takes a lot of buying pressure to push price up to here. And that's what it's telling you, okay? When you can identify this candlestick pattern on your chart, it's going to help you also visualize where supply and demand is located, okay? When it occurs in a downtrend, it's interpreted as a bullish reversal signal, okay? You can't trade candlestick patterns alone, okay? Now, I'm going to keep repeating this because right now we're just learning to identify these candlesticks, okay? This is another dragonfly doji. Right here. Let's go to our chart and look and just see if we see any. Here's one. Here's one. The market was going down. It started to go back up. Okay, you got this dragonfly. You've actually almost got two dragonfly dojis. And then price went down. What is this, guys? Type in the comments. What is this right here? Type in the comments. What are these two candles right here? We just talked about them. Type in the comments. What are these two candles right here, guys? This one right here, guys. Come on, guys. Type it in the comments. No. No. Right, Dewana. These right here, these are dojis. These are just doji candles. They look like a cross. You should have wrote that down in your notes. Here is another doji. Right here. And what does doji tell us? That we could be at the end of a trend. That we could be at the end of a trend. And then look what happened. Boom. Boom. I'll say. So we look at these as secure profits. If you've been rocking this trend, you've been catching these pips, you see a doji, you better set a trail and stop, or you better secure that bag. Boom. And it went back down again, went back up. And then look, it printed not one, but two. And then what happened? It reversed and it went back up. You guys see this? So I really hope y'all are writing down your notes. Sergio, no, the dragonfly doji. The dragonfly doji. Let me find another. Look, are these right here? Where they look like a T, like a capital T. Where they look like a capital T. Just a doji is like a cross, okay? Ooh, write this down. Now we've got a gravestone doji. A gravestone doji. What is a gravestone doji? It's a bearish doji. Dragonfly doji is a bullish doji. This is a bearish doji. The difference in the dragonfly doji and the gravestone doji is this tail. See, with a bearish gravestone doji, this long wick, it's on top. This indicates that the market is testing a powerful support or resistance area. Okay. This illustration right here shows a perfect gravestone doji. I hope y'all wrote that down. Gravestone doji. Okay. It's indicating that the buyers were able to push price way up here above the open, way up here at the open, because it opened down here. And the buyers were like, yeah, we got this. And guess what? Here come the sellers. Boom! Push that price down. They pushed that cash right back down to where it started. Okay? When you see gravestone dojis, it's an indication Okay? It is an indication that the uptrend you're in is losing its momentum. It's a signal for reversal. Okay? When you see these, know that the buyers are no longer in control. And then also make this note. For this pattern to be reliable, it needs to occur during a resistance level. We're going to get to how you trade these. Now it's just important that you can identify them. So let's look for some. Let's look for some gravestone dojis. There's a dragonfly doji. And I guess how you can remember them is dragonflies fly up high. So when you've got the T at the top, you know, flying up high, it's a dragonfly. Okay. And when you hit a gravestone, you got your you know what in the dirt. I like analogies. Right now we are looking for a gravestone doji. Here's one. Here's a dragonfly doji. Here's one. Right here. Right here is a gravestone. Just a regular old doji right there. Doji. Doji. Almost a dragonfly, but it's a doji. Doji. There's one. There's a couple of gravestone dojis. And it's going to be up to you guys. You know, we could sit and we could go through charts and identify these candles all night. I'm going to identify a few with you so that you know what to look for. But it's going to be your job as you're looking at these charts to start to recognize what these candles are. Okay? Now we've got the morning star. Write this down. I want you to draw this picture and label it. Draw it and label it. I'll be right back. Okay, the morning star is a bullish reversal pattern. It occurs at the bottom of a downtrend. It consists of, 3 candlesticks. Okay, the first is a bearish. Indicate, I'm so sorry. It's Alabama. And it's September, which is the worst allergen month for me. Okay. I'm so sorry. Okay. The first candle is a bearish candle, indicating that the sellers are in charge of the market. Okay. The second candle is going to be a small one. Okay. It kind of indicates that the sellers are in control because it's still a bearish candle, but not much control. Okay. Because say they don't push the market that much lower. This can be bullish or bearish, the second one. Okay. The third candle, though, is going to be a bullish candlestick. Okay. They gapped up on the open. And closed above the midpoint of the body. Okay. The third candle is a bullish candle that gapped up on the open. And I won't see right there in the picture that it gapped up, but okay. Okay. This right here, the morning star, can signify a reversal. It shows us that the buyers took the power from the sellers. You guys see that? Got your bearish candle. You've got a smaller candle. And then you've got a bullish candle. Okay, this happens at the bottom of a downtrend. Okay, bottom of a downtrend. It happened at the obvious place. Okay, this first candle confirmed that the sellers are dominant. They got this. Okay, the second one, what is this? What is this candle right here? Like a doji. What does it mean? Indecision. It could be a doji. It could be any other small candle, okay? Right here you see that the sellers are struggling. The sellers are struggling, okay? And then you see that the buyers took control. You see? It's a big candle. The sellers have got it. But something's happening because now you don't know what price is going to do because of this doji. Could go either way. But the buyers took over and it went up in an uptrend. Morning star, guys. Let's try to find a morning star. Let's try to find a morning star. Ooh, I went too far. All right. I'm looking. Here's an example of one. The sellers was pushing it down. Here's a smaller body doji candle. And boom. Buyers took back control and went into an uptrend. Right here. Here's another morning star. Oh, big scary candles. Big scary candles. There's a doji, guys. What happened after that doji printed? I look at candles as printing money. Okay, I don't know if that makes any sense to y'all, but when candles form, it's printing price. It's literally printing price. So to me, I just get it in my head as, you know, it's printing money. I don't know if that helps y'all or not. Price found. There's a doji. A very indecisive market right there with little small candles. Here's one. Went down. Little bitty small body. Struggling. Price was struggling. The buyers and sellers were definitely fighting, and the buyers took over. This is good stuff, ain't it? I'm trying to find y'all some better morning stars. Here price was in a downtrend. Here comes a doji. I'm going to take a picture of that because I'm pretty sure that's a morning star. And you get some more professional opinion than mine. All right. Ooh, here is a perfect one. Price went down. A little indecisive candle. Not quite a doji, but almost a doji. And boom. And I'm going to tell you guys something about these candles right here. I'm going to tell you something about these candles right here. I'm going to tell you something about these candles right here. I lost it. I got excited. Where did it go? Well, fiddlesticks. Yes. I lost it. Right here. Nope, that wasn't it. Well, we're going to get to those candles. And I will tell you when we get to it. But I just seen one. Got me excited. Dang it. I lost it. Okay. All right, guys. Homework. Homework. I want you to go to your charts, and I hope you're taking notes. Don't ever, ever, ever come to class without your notebook, without your pen, okay? I want you to, your dojis, your dragonfly doji, your gravestone doji, your morning star, all of these that you should have wrote down in your notebook. All of these that you should have wrote down in your notebooks. I want you to find them on your charts. Your bullish engulfing, your bearish engulfing. I want you to find them. Start recognizing them. Look for them. Okay? And we will continue tomorrow night with the evening star. Okay? Y'all just stick with me, guys. We'll be talking a lot more about candles during live trading with Misty. Okay? Sorry. Corporate just emailed me. All right. Thank you, guys. Can't wait to see y'all tomorrow night. I'm hoping that this is making sense. If you got something out of class, put a 777 in the comments. If you got something out of class, put the 777 in the comments. Okay. Thank you, guys. Oh, y'all are so welcome. Now, if y'all will, do me a favor and go to the Pippin Superstars chat and drop a comment about how fire class was. Maybe we can get some more people here tomorrow night. Okay? I love you guys. Yes. Yes. Go talk about it in the chat. How awesome class was. We need to get some more people here tomorrow night. I love you guys. I will see you tomorrow. See you in the morning for New York. I love y'all. Have a great day.